This is the Construction Leading Edge podcast from constructionleadingedge.com and buildermasterclass.com. My name is Todd DeWalt. It's my job to help you, the construction business owner, eliminate chaos and maximize profits on your job. I've got a fascinating interview for you today with Margaret Whelan. She is the founder of Whelan Advisory, which is a New York-based, women-owned boutique investment bank focused on advising housing and construction companies on mergers and acquisitions and capital raising. She knows what's going on at high levels of the housing and the construction industry. We're going to talk about where the investment money is moving in the construction industry. Here's what you're going to get out of this interview. You'll learn why Margaret says we have a process constraint, not a labor constraint. We'll talk about what's going on with the build to rent housing product, how to be a thought leader. Margaret explains the difference between creating demand versus adding to supply and which one you actually want to do. She talks about some of the big builders who are disrupting the housing industry. She'll share some of the best career advice she received early in her career. She'll explain why some of the biggest home builders aren't really home builders. If you look at their balance sheet, you'll see that there's something else. She talks about why successful builders build every house twice. I asked her the question, what's the biggest risk to the home building industry right now? And frankly, her answer surprised me a little bit. She'll explain some of the things that are going on at the macro level of the housing industry that she's most interested in. She'll share some of the biggest opportunities that you as construction business owners and leaders should prepare to jump on over the next few years. She'll talk about the term autopsy accounting, which is an interesting story, and then some things that you should start thinking about, some things you should definitely start doing if you ever want to sell your business. Fantastic interview. Lots of good stuff in here. You probably want to take notes on this. Be sure to check out the Construction Financial Masterclass. We talk about the importance in this interview of having good financial information. And if you want to set up a precision bookkeeping system, if you want to understand how to analyze your financial statements and the story they're telling you, if you want to price your work for profit, if you want to maximize your cash flow, then the Construction Financial Masterclass will help you do all four of those things, plus a lot more. If it's available right now, you can get your seat for the Construction Financial Masterclass at buildermasterclass.com/CFO. If it's not available, you can get on the wait list and it will be open again soon. So be sure to check that out. A couple of other resources I want to share with you before we get into my interview with Margaret Whelan. The construction industry is facing major headwinds. More than 80% of contracting firms report that they're having trouble finding skilled labor, and greatly inflated material costs are eroding the bottom line. To be profitable, you need to be able to do more with less time, less money, and most importantly, you really need to manage your critically essential labor force with greater precision. Let's face it, the inefficiency of old school manual data entry and paper pushing is wasting thousands of dollars in valuable time every day. You need to know what's happening on your job sites in real time. The solution is Struxy labor productivity software. Built on over 50 years of construction tech innovation, Struxy replaces outdated paper timesheets and production reports with software that updates you every hour on labor performance. Struxy labor productivity software tracks your crews in the field down to each individual worker across multiple projects and allows project managers and job site supervisors to track labor production down to the cost code. Fully customizable reports allow you to establish ambitious but realistic daily production goals and estimate how many crew members and workdays are needed to complete a job on time and under budget. Struxy lives in the cloud. It can be deployed on relatively inexpensive tablets and laptops, and it is incredibly easy to use. Plus, by reducing time clock rounding errors, it will pay for itself on your first project. Visit Struxy.com to estimate your annual savings with their cost-saving calculator and to sign up for a 30-day free trial. That's Struxy.com. Struxy.com. Software built for hard work. If you're a busy construction business owner, there's a pretty good chance that you don't have good visibility into your financials. You could be getting financial reports too late, or maybe not getting financial reports at all. Or maybe you're not keeping your books up and you really don't have any idea what your numbers are. Well, if that's you, you're not alone. Scott Schweiger said this: "I highly recommend Apparatus Contractor Services. My small startup construction company was over a year behind with its bookkeeping. I was wearing way too many hats, and ultimately the books suffered. They provided bookkeeping solutions that got us caught up in the systems to stay on the right track. I'm so happy I'm turning over payroll processing to them as well." Elizabeth Evans said, "Hiring Apparatus was a game changer for our business. They've allowed me to grow our construction company over 100% since we hired them about a year ago." Bill, president of Spice Industries, said, "Hiring Apparatus was one of the best business decisions I've ever made. They have almost completely freed me up from sitting at my computer reconciling budgets with my own makeshift system." So if you want to offload your bookkeeping or payroll headaches, or you just want better reporting, the Apparatus Contractor Services team may be able to help you. Visit goapparatus.com to hear from other construction business owners and see how Apparatus can help you. That's goapparatus.com. All right, here we go. Grab something to take notes with. You're going to get a lot of actionable advice out of this. Enjoy my conversation with Margaret Whelan. All right, Margaret Whelan, thank you so much for being on the podcast. I've been looking forward to this conversation. How are you today?
Hi, Todd. It's good to be with you today. I'm doing very well. Thank you for including me.
Absolutely. You have a fascinating vantage point on the construction industry, which we'll get to in just a couple of minutes. But the first thing I want to start with is in a recent Builders Daily post, you were quoted as saying, quote, "I believe we have a process constraint, not a labor constraint," end quote, which, as we chatted about before I hit record, a lot of people say that the problem is just a lack of labor. And you think that it's a process constraint, not a labor constraint. Can you expand on that statement for us?
I can. And, it's interesting because I was doing an interview, I guess, like this for John McManus at the Builders Daily a couple of weeks ago. And I made that observation that that's my view on the bottleneck or the situation. And then he repurposed that quote, and I got a ton of calls about it. But I think that it's so obvious, Todd. We improvise too much on job sites. I mean, imagine if Boeing built airplanes the way U.S. homebuilders build houses, where, oh, no problem, we need a little extra lumber over here, we'll just take it from there. Oh, MEP is not where it's supposed to be, no problem. Or the foundation isn't flat, oh, we'll just work around it, right? It's just a very unusual industry. And so in my mind, if we did not have so much improvisation, which leads to so much rework, then we would not need so much labor.
So the process, where should people start? Where should they start thinking about fixing the process if the process is in fact the problem?
I think there are two things. I think one is to simplify the product itself, because with simplicity and repetition, you can really leverage offsite solutions. And you've seen that a lot with the growth in the last couple of years of build-to-rent product, in particular in Phoenix and some of the Southwest and Southeast markets. And it's very simple product. It's high density, typically 8 or 10 per acre, and it's a lot of repetition. And so typically the U.S. home builders allow their marketing people to offer their consumers a lot of choices, from options to upgrades to elevations. And that results in almost a bespoke home being prepared each time, which can lead to a lot of risk and a lot of changes that are hard to incorporate. Whereas when you have a simpler product, you can be much more deliberate with the process. And in doing so, you're going to have less waste on the job site, less days of downtime, and really an increase in productivity overall.
Yeah, so standardization, and this makes me think of some conversations I've had with clients who are either high-end remodeling clients or they are high-end custom home builders, and they're stuck in this place of believing they have to have the old Burger King approach, which is have it your way, whatever you want. Just we will build your dreams. We'll just open up the catalog with every possible option, and we'll just build whatever you want. Have it your way. And many of them, if they're being honest, are a little afraid to standardize and limit choices, and go to the more of the was it the Henry Ford approach when he said you can have whatever color Model T you want as long as it's black.
Yes.
So what would you say to those builders and remodelers who are just giving or allowing their customers to have it their way? What's in it for the builder to standardize?
Well, I think there's so much to be standardized, but the interesting thing about all the great Henry Ford quotes, because I'm a person who loves quotes, and is that apparently a lot of quotes that are attributed to him were not actually spoken by him initially. He repeated quotes and then got credit for them. But another great quote that he's famous for is that if he had listened to the consumer, he would have been building faster horses, right? Because when he introduced the automobile 100 plus years ago, and it was so well received so quickly because of the horsepower versus the horses, and that's just thinking outside the box. So what I would encourage good, thoughtful home builders, and I think Pulte is a great example of this, a young, energetic, engaged CEO who's really come up to the industry, and that allows him to think about things differently. But I would encourage them to look at disruption that's happening in other industries, what's been successful about that disruption, and imagine the unimaginable. Because if you look at Tesla, for example, good, better, best, beautifully crafted, energy efficient cars, not even inexpensive, right? Great value to the consumer, but completely different. The electric motor, the sales process, the lack of customization, so much simpler overall and so much demand. And so that is the way I think the home builder should think about the consumer. You're definitely seeing examples of builders despec the houses. I guess they're starting to offer less options and upgrades. I think they always perceive that as a advantage from a customization and a customer perspective. They felt like they got incremental gross margin, but then when they really drilled into the numbers, they realized that they were not actually making as much as they thought they were, because the extra days to complete that house and all the extra waste ultimately were eating into the margins. So that ultimately is what I think that they should do. Just think outside the box and simplify the product. Maybe not let the consumer lead so much.
Yeah, I heard someone else say that people are generally bad at knowing what they want, and asking them, saying, "Hey, well, have it your way." It's really, in some cases, it's creating a paradox of choice. We think we're doing people a favor by giving them unlimited options, but unlimited options create a lot of stress, and you're actually doing everybody a favor by limiting the options. I worked on a large senior living community that had about 250 units about 10 years ago. And the going in base sales approach was there are 4 finished pallets you can pick from. And they were beautiful pallets, painted cabinets or stained cabinets, a few options of each. And that was what they started with. If somebody wanted to customize, then they could, but it was actually discouraged because it just created so much chaos, especially on a really large project. So yeah, customization is not necessarily good. I think that's a great takeaway.
It's also a very complex product to build a house, right? And what I think when I take a step back at our industry, but I look at the car that I drive or the phone that I use, and over the last decade, I'm in my late 40s now, but over the last 10, 15 years of using a cell phone and then a mobile phone and a smartphone, right? The technology that's available to me in this phone is like an office in my pocket. And the same, my car is so smart, it can anticipate so much. Yet the same house, the same type of house is built in exactly the same way decades later. And so I think when you look at, again, going back to disruptors outside of our industry, because I think the only way you can be really a thought leader is to stop talking to the same people, stop thinking about things the right way and think outside the box. But the solution that Uber and Amazon and Airbnb and a lot of these great disruptors have come up with is to think about think about creating demand versus adding to supply, right? So I don't need to be the next guy selling a house or a car, but how can I create demand around something that's super exciting? Everybody wants a smartphone now, right? Because they're so smart, they're so efficient, they make your life so much easier. And so I think that's the way to be creative about it. And today, 12, 18 months into the pandemic, and not just the fear around health and safety and clean air and so on, but also my family lives in New York City. A lot of families are leaving because there's so much social unrest and so many protests, feeling less safe over the last 12, 14 months. And so there are so many families that want to get into the suburbs. That is demand. So you create supply to match that demand and get those spec houses built more quickly. And I think there are some builders that are doing a very good job of that. And you're seeing that. D.R. Horton's a great example. You're seeing that in their results over the last year. They just can't sell houses quickly enough. They can't build them quickly enough.
Yeah, so let's talk a little bit more about creating demand, and then I promise we'll get to your background, but this is a fascinating conversation. When you say creating demand, how can a contractor, let's just be more general, how can a business create demand for their products or services?
Well, I think it is anticipating what the consumer might want. So, for example, I would love to move with my family, but I would really not like to build another house. I've done that once in my lifetime. Thankfully, my husband and I are still together, but there were definitely times when we weren't sure we were going to make it. And so how could I do that, but do it simply? And that's the idea of creating the demand. If someone were to come to me the same way I could buy a Tesla and say, look, this magnificent new house will be dropped on your door, customized to the way you want it in 90 days, that will be super attractive to me. I could lock in my mortgage rate, know that I'm going to have everything that I want, sell my existing home and make that life change. And I think in our industry, the lead time is so long. I mean, one thing that's been fascinating to me over my 30-year career working with US housing companies is that initially when I started in the early 90s, delivery times will be quoted in days, and then it was weeks, and now it's months. I mean, Todd, how many industries do you know where the providers have gone backwards? That's just negative value for the consumer having to wait that long.
Yeah. So what I'm hearing you say is one of the opportunities is, or what people are looking for is the experience. So it's not necessarily just the end product, the sticks and the bricks and the building science and all the components, but the sales experience, how long it takes, how smooth it is. What would it, and I was a home builder, and my wife and I, my wife built a house with her husband as the builder almost 20 years ago, and that was tough. But yeah, imagine what it would be like to enjoy the home building process. What if it could be fun? And I think what you said is probably the general opinion on going through any sort of construction project is, wow, how's your marriage? Because this could be the end for it. So just be vigilant.
Well, it's going to take longer. It's going to cost more. You're only going to do it once or twice in a lifetime. And afterwards, you're going to feel like you've screwed up or you wish you would have thought about things differently, right? Yeah. I think that's unfortunately how most smart professionals feel after they buy a home. They're like, man, how did I not see this or that? So when you talk about improving the experience, I just want to shorten the experience. I don't want to think about it as an experience. I just want it to be over with. So going back to a modular home, maybe that I have some, like you said, 3 or 4 different packages. I can determine the customization. It shows up and it's plugged in 2 or 3 months. That would make me super happy.
Yeah. Fascinating stuff. Okay. Let's talk about what type of work do you focus on? What do you do? And how did you get into that business?
Sure. So I'm based in New York City and I run a boutique investment bank. We primarily work with residential real estate and construction companies and operators. We don't like to have any conflicts in my business. So I only work for operators. We don't work for investors. We work in M&A. We split our time evenly between representing companies that are for sale. So helping them to position themselves and then find a buyer, and raising capital for companies that are growing quickly. And I grew up in Dublin, Ireland. I was recruited out of undergrad in the early 90s. Have always been in investment banking my career, and have always been in residential real estate. I absolutely love the business. I have great friends, great memories that I build on all the time, great references from clients that I've worked with and represented over and over. And I feel very fortunate to have my own business now. I left JP Morgan about 8 years ago, which is not a step a lot of senior level investment bankers make, to go out and be an entrepreneur. It's not a naturally entrepreneurial business, but I had a vision to offer a higher level of service to a smaller group of clients. And the only way I could do that was by starting my own firm. And fast forward 7 years now, I run one of the only women-owned investment banks on Wall Street, which I'm very proud of. And in particular in the construction industry, because there's so few women and so little diversity in our industry, which is probably the reason we're not thinking outside the box.
Yeah. Let's talk about diversity. I was at a large conference, November of 2019. There were about 3,000 or 4,000 people in the audience, and there was a panel discussion. And a woman walked up on stage and said, one of the problems with the construction industry is it's male. It's mostly male, pale, and stale.
Was that me?
No, it wasn't you.
Oh, because that's my quote. That's funny.
Oh, is that you? Is it something?
Yes. I said the industry is PMS. You don't have any women, but you're suffering.
Okay. Well, that was completely unplanned. That is your quote. So unpack that for us, if you would. What? I'll just leave it at that. Unpack that for us.
Well, it's funny, what a small world, because I have been using that quote for a long time. I love it, and I thought that I came up with it. Maybe I need to trademark it at this point, but I have been in that situation at many conferences like the International Builders Show, where I'm often brought in as a professional speaker, and I've stood in front of tens of thousands of people and thousands of people, and I look around at a bunch of all white guys, and they're looking at me saying, well, why isn't this happening, or why isn't that changing? But really, they need to be looking at themselves. And so the lack of diversity of thought is the issue. And the way you get diversity of thought with diversity of people. I'll tell you, for me, at this stage in my life, what I find most valuable is generational diversity. Because when you look at how young people make decisions and why they make decisions, it's really fascinating. It's so different, I think, because technology has been available to millennials much more than it has for someone like me, for example, who graduated in the early 90s. And I think by leveraging technology and that kind of Amazon mentality, where I want whatever that customer experience was, it was excellent. I want that, and I expect that with everything. I think that is what we need to embrace, because they're essentially the customers. And if you listen to your customer, you're much more likely to have a successful business model.
Yeah. Interesting. So let's chat a little bit about what I love to interview women in the construction business, especially women construction business owners, to share their perspective. So what advice would you share with women who either want to advance into leadership in the construction industry or to own their own business in the industry someday?
Look, I don't think it should be specific to gender or anything else. I think it should be specific to talent. When I came over to the US as an immigrant, I had worked very hard to put myself through university. I graduated at the top of my class. Once I went into my training program, I was different. I had a funny accent. I had learned different accounting practices. I didn't come from an Ivy League school. My parents were not in investment banking. And so what I decided was, I'm just going to work harder. And that served me very well. My very first boss on Wall Street, who I'm actually neighbors with by a small world coincidence and see often, told me at the very beginning of my career, literally in the first week, I asked him how I could be successful. And he said, be here when I get here in the morning, be here when I leave at night, and have a smile on your face at all times. And that was such great advice, because it's really about being available adding value, contributing, and having a good attitude. And the rest just comes to you. And then within a decade, I had made managing director very early in my early 30s, so much sooner than a lot of other people in the business. And that allowed me to move from UBS, where I'd worked for a decade, to JP Morgan, and then gave me the confidence to start my own business. But I do think that it's about just getting started. A lot of people wait, they want everything to be perfect. Well, the world's a messy place and it's never going to be perfect, but just getting started and then pivoting all the time. If you look at Uber, for example, I remember reading their initial investor presentation, which you can find online, and it's fascinating relative to the product that they provide now and how disruptive they were as a service. But it's just getting started and then focusing on a bunch of stuff, maybe half a dozen things, and always gravitating towards the 2 or 3 that are working and away from the ones that are not. And having the thought of mind, the data analysis to understand the difference, and then having support around you. I mean, I would say more than anything else, what has contributed to my success in the last decade is my husband. It's my life partner. We have 4 children. The oldest is 10 years old. At one point, the oldest was 3 years old. And people would ask us if we were out as a family. They're like, wow, are they all your kids? And then the next question is, well, did you give birth to all of them? I'm like, yes, I did. And actually, that was one of the reasons I started my business, because I needed more personal time. And I wanted to either focus on work that was valuable to me and to my family or not at all. I didn't want to be in a bunch of meetings anymore, busy time. And that has served me very well. But I'm involved with the Women's Housing Leadership Group. I'm involved with women in the boardroom, women corporate directors. And I think that most women will tell you that it's really just about working hard more than anything else.
Yeah, that's great advice. Is there any bad advice that you see being given out to young people, bad career advice that you would tell people not to listen to?
Well, I think one thing that young people are doing a better job of than my generation would have done. When I came out of university, the whole idea was you had to get on the property ladder. You had to buy a house, and then you should get married and you'd have children. And now you look, more children are born to parents who are not married than who are. And you have so many dual working families, and that's facilitating a lot more transition, rental versus ownership. I think it's just kind of following your gut and doing what's right for your family. I admire some of these young people who move around more quickly in their lives. I probably would have started my entrepreneurial career earlier. I had thought about it for a decade, and it wasn't until my husband pushed me that I actually got it off the ground.
Yeah, I think I really like what you said about the Uber situation. And I've studied some other startups. Most startups pivot at least a few times. And in some cases, they take hard right turns and go in completely different directions. And the quote that I like to share with my clients is, whether it's starting a business, putting a new process in place, is you don't have to get it right. You certainly don't have to get it perfect. You just have to get it going, and you have to get some real life customer feedback. One of the things that I've learned is, well, the mistake that I would make would be I would go into my R&D cave and think about something and spend months building something and roll it out, only to find out that it didn't solve a painful problem. Nobody cared. I thought it was cool, but that didn't get anybody to pay me for it. So it's much better to talk about problems, get moving in a direction, get some real life feedback, and think of it as an experiment. We're going to run an experiment. We have a hypothesis, but we need to test it, and we want people to write us checks to test that hypothesis, and then make some adjustments as you go. And that works so much better than going into the R&D cave for months at a time and just wasting it. Yeah.
Well, or like investing a ton before you see any real light at the end of the tunnel. It's better to start smaller and build on the wins and the confidence than to just wait so long and miss out altogether. Sometimes the market can have moved. You've waited so long. It's
true. Very true. So let's talk about some mistakes that you see home builders making. You have a unique vantage point in the industry. What are some of the, say, one or two of the biggest mistakes that you see home builders making?
Well, I think the word home builder, the way you and I understand it, the way it's used in the industry is really a misnomer, Todd, because these companies do not build houses, right? If you look at the balance sheet of a publicly traded home builder, and there's 20 of them, and all of their financials are readily available from the SEC, all of their balance sheet exposure is on land and very little is on construction. And so there are land speculators who facilitate construction on behalf of consumers. And then you go to a job site and you see that over 100 plus day cycle, a baton's getting passed up to 30 times between all the different subs that come in and out. And so not facilitating communication between those subs, they're having an overly complex process. I think that is a big mistake. The builders like NVR, LGI of the publics that are actually home builders that own less land, make less profit on land, but very thoughtful of product, have been rewarded for that with higher margins, higher returns on capital, and higher multiples, leading to a higher stock price. The other thing that I've learned over the last 5-10 years as we've been representing construction companies. So in the last 4 or 5 years, we sold a company called Integra, which is well known for its innovation. It's a team from Europe, actually from Ireland, from where I grew up. We sold them to Louisiana Pacific, and then we sold RCI to BFS, and then ICG to Pulte last year. And one of the things that all three of those turnkey framers do with their offsite solution is they build every house twice. And the first time is in 3D. And as they do that, they rationalize the plans and they realize the plumbing's in the wrong position relative to where it needs to be, the HVAC, the electricity, the headers, and they take out an awful lot of waste. And I think that thinking through the process and building everything twice, the first time in 3D is so much less expensive. And in particular, what I've noticed with these companies is when you go out to their framing sites, to the divisions or the subdivisions where they're doing work for home builders, there's very, very unlikely to find a dumpster. Whereas typically on a stick-built house job site, there's a dumpster in front of every single house and up to a third of the materials that the consumer is paying for. Remember, half the cost of building a house is sticks and bricks, probably more right now with all the cost inflation. Half of that is in the dumpster. So it goes back to the lack of process. What's the challenge? What's the opportunity for our industry? It is streamlining the process, being more efficient, building everything twice, first time in 3D, and then using that tool to rationalize the plans and make everything simpler. In doing that, we would dramatically improve affordability because we wouldn't have so much waste.
Yeah, which is something that the commercial construction industry started doing 25 years ago with BIM coordination. When I was a commercial project manager, we would never start MEP construction without first doing MEP coordination with all the, it's a little bit, well, it's quite a bit different in a commercial project where you have 4 or 5 layers of utilities above the ceiling, but the concept is the same. Build it digitally first. Look for conflicts on paper or digitally rather than deal with clashes in the field. Yeah, just makes so much sense.
Yes. And it's harder to improvise on a multi-story building or commercial building versus an independent single family home, which is why I think we haven't seen enough improvement to that process.
Yeah. When I think about the design process, for example, well, in general terms, the construction process should be more like the design process. So I studied structural engineering, and before you design the foundations, you have to design the roof. And then you carry everything down, and then you size the foundations. So you start with the end in mind, or as I like to say, you operate from right to left, go out to the right side of the page, and then work backwards from there all the way out before you get started. And a lot of builders operate from left to right, and they just get started with the information they have. I think there's a cognitive bias towards starting things. We just love to get things started, and then we're not so great at the finishing. And I think that's where a lot of the problems come in. Next question.
The messy middle.
It's the messy middle, and then the last couple of percent That's where things tend to fall apart.
Yep.
Let's talk about risks. What do you believe to be the biggest risk to the home building industry right now, or the construction industry as a whole, whichever way you'd like to take it?
It's hard to sit here when you have record everything, so much great growth and momentum and rates so low, and think that there are a lot of risks. But I would say the big one is the great, what they call the gray tsunami, the fact that people are aging out of the industry so quickly. I don't think we've done a good job of recruiting younger people, filling in the generational gap. And so in a lot of industries, you have a barbell between people who are retiring and young people who have been recruited and are learning or training and developing with that older cohort. And unfortunately, now I think we might be at a point where we're going to miss an opportunity for younger people to learn from folks that have tremendous skills and craftsmen. At the same time, that might be the opportunity because they're not going to learn to do things the same way that it's been done before. And maybe without that labor, we'll really reach a bottleneck that will facilitate this change and focus on process that we so badly need.
Yeah. Let's talk about what's going on from an economic standpoint right now. We have historically high lumber prices that, as of early May 2021, I saw an article over the weekend that said we expect them to go up a little bit more, to get worse before it gets better. We have historically low interest rates. From your perspective, like how concerned are you about the next 12 months, or what are you most concerned about in the next 12 months in the home building industry with everything that's going on?
I would say there's really not that much that I'm concerned about in the next 2 to 3 years in the home building industry. But having said that, we are seeing a bottleneck because of the lack of availability of labor, the lack of availability of materials, Todd, and then also the lack of availability of finished lots on the land side. After the global financial crisis a decade plus ago, a lot of the banks did not come back into the industry, so you haven't had as much capital available. And so I think that at some point, these become a supply constraint versus too much demand. Or versus too much supply, because in the last, what led to the GFC really was too much liquidity in the mortgage market, leading to too much housing supply. We're not going to have that this time around, and the tightness in supply is really not a bad thing for an industry that's inclined to overdo it and to overbuild.
So I'm hearing you say you're not concerned about a bubble, a housing bubble. Is that correct?
No, not whatsoever. I don't think we're close. Not even in different markets. I don't think we're close.
Interesting. While we're talking about the big picture, what are some of the things going on at the macro level of the housing industry that you're most interested in these days?
Well, I'd say the one thing that I'm most interested in is the trend where you have these Japanese buyers coming in and buying a lot of well-managed, well-run stick builders in the US. We've advised on several of these transactions over the last few years. And I think the Japanese have learned to build in a country where you have a population of 100 million, but geographically it's not even as big as California, and it's very mountainous. So they have learned to build very efficiently. And I think that is a trend that once they come in and start owning these companies, that they might try to facilitate better processes the way they have in Japan, which would benefit everybody, in particular the consumer, from an affordability perspective.
Interesting. You mentioned Integra. What do you foresee happening with offsite construction here in the States and Canada? Where do you see that going over the next couple of years?
Oh, I think it's going to expand. A lot of those companies like Integra are very strong framers, essentially, but the frame is so important. If you can get the frame right and the precision in the frame, then you dramatically reduce the risk of other things going wrong, of people hurting themselves at the job sites, people theft, materials being stolen. You weatherproof the house faster, so you have less issues with inclemental weather if it were to change. And so I think really the opportunity there has been significant, and I think it's going to continue. But so far, all of those companies that we've worked with are offering what we call an open frame solution, which I'm sure you know what that is, versus closed frame, which would be more modular. We're also working with a manufactured housing company right now that we're selling, and it's fascinating. They have half a dozen factories around the country, and they deliver these double wides down the production line every day that they gel together and then put on trucks and move to the home site. And it's amazing the light switches, the light fixtures, everything, almost curtains and carpets are in these houses. And it's fascinating to see it. And I have to think that with all of the demand for single family homes these days and for less expensive single family homes, I think some of the NIMBYism might change and you might see more acceptance for higher density communities of rental homes or for sale modular homes versus stick built. That would be something I would love to see happen in the next couple of years.
Speaking of the next couple of years, what do you think are the biggest opportunities that smaller builders should prepare to jump on over the next few years? Either whether it's things we've already talked about, like, hey, really focus on the experience, speed up the delivery times, maybe it's a different methodology, but what are some of the biggest opportunities that you see that should be capitalized on over the next couple of years?
I think embracing the next generation, going out and finding young people to come into our industry. There's a company I'm very familiar with out of Phoenix, Brewer Plumbing. They're the largest plumber in the Arizona market. They service all of the biggest home builders in the country. And they actually started an academy a couple of years ago because they could not find labor. And so they go out and they recruit high school graduates and they actually pay them to learn how to be plumbers. And then they pay them on the job sites to work for them. And what they have found is tremendous success. Actually, a third of their current employee base came up through this recruiting program. And so I think thinking outside the box right now, allowing young people to get paid sooner versus later to learn this craft and feel proud about it and really think of it as a skill, as a trade, is going to be very important to keeping our industry going.
Great advice. Great advice. From your perspective, where is the investor capital currently flowing in the housing industry? What are investors most interested in right now?
Build to rent. We have placed, on behalf of 4 or 5 different clients, $900 million of equity, representing operator clients or raising money to do build to rent and single family rental strategies with investors that they wouldn't have met without us facilitating the introduction. And I would say the investor appetite for build to rent is higher than anything that I've ever seen. We're also working with a lot of top 50, top 100 private builders that are getting ready to sell to Japanese companies and helping them with their investment positioning so they can really maximize the value, but also introducing them to the Japanese. I'm seeing that more than anything else. We are working on some private builder M&A where you have a big public builder that just needs to fill in a gap in a geographic market. They don't have the lot position that they need. So we're helping get that going. But there is an awful lot of capital. I feel like U.S. housing has been a bright spot in the global economy for the last 12, 18 months. And you have money coming in from all over just to demonstrate that.
Occasionally, we talk a little bit about exit strategy, and I've had a few succession planning experts on here, but it's worth talking about because at some point, every business owner wants to they will get out of their business one way or the other. You will get out of your business. So, first question, what is the planning time frame that you would advise someone to consider? How far in advance should they start thinking about selling their business? Is it 18 months? Is it 5 to 7 years? How long should they be thinking about this?
It's a good question, but I think that it's a function of how professional the business is. The cycles are less severe right now, so you don't necessarily have to time it as well as you had to before. By professional, I mean, it's very hard to sell a company that doesn't have a strong finance team, that doesn't have independently reviewed or audited financials by an independent auditor versus by your sister-in-law who happened to have a CPA 30 years ago, and then real understanding of what your core value proposition is and some growth plans some forecasts for the next 2 to 3 years. When you have all of that and you're ready, you have a team in place and you can keep the momentum that you've built already, I think that's good. Often it takes longer, Todd, if you have multiple generations. Often we have a couple of generations owning these businesses in our industry, or siblings who have different needs. And when we have a potential client ask us to represent them in a situation like that, I always tell them to go and figure it out and come back to me when they know what they want. Often they want us to come in and try and adjudicate on their behalf, which is a miserable position to be in. It's much better for an attorney or a accountant versus or even a wealth manager versus an investment banker. But when the company and the team is ready and on the same page about what they want to do, then we can really help them.
So being professional means knowing what you want, having the financial foundation in place, having probably having an accurate balance sheet, understanding your financials, having a plan for the future. What are some of the most common mistakes or deal breakers that you see when someone comes to you? Either they come to you and they want to sell their business, or you're looking at a business to acquire. What are some of the red flags or deal breakers that we haven't talked about?
Well, definitely the financial prowess. Having independently reviewed financials and having a strong finance team, really understanding the growth. We had a client recently that we were trying to help, but they were doing what I was calling autopsy accounting, where 3 or 4 months after they delivered a service, they were realizing they had lost money on that contract because the material prices had jumped so much. And that was just a lack of visibility on the part of the CFO and poor planning. And so I think that really rigorous financial analysis, data management, understanding where the risks are, having KPIs, key performance indicators, and monitoring those, tracking them, and being able to say, these are our KPIs. They are the same for the last 12, 18 months, and here's how we performed relative to them. Here's what we're doing to improve. Here's what we're pivoting towards or away from. I think all of that really helps to build a nice investment positioning story from a buyer's perspective.
I like that term, autopsy accounting. Yeah, where it's everything's dead, and you're trying to figure out what died.
Yes.
Why did we die?
Yes. Yes. Unfortunately, you see a lot of it in our industry.
Yeah.
Another thing that I found from a sense of being professional is, a lot of folks in our industry have family members on the payroll who don't actually work at the company, or who are taking up roles that they're not well trained for. And that can be more problematic than accretive. And so just cleaning all of that up before you sell, because a buyer would never want to be in that situation to have to manage those people out. Doing that earlier is better.
Yeah, I've been exactly in that situation in a multi-generational business with multiple family members on the payroll, some working, some not, some adding value, some doing the opposite of adding value, some racking up tens of thousands of dollars in personal expenses a month. And it's a cancer that, if not dealt with, will spread and will prevent you from selling your business. Yeah. So I think that's a good takeaway. Don't think that a purchaser, don't think that a buyer is going to take your problems. You'll have to clean your problems up. And I interviewed a gentleman a couple of weeks ago who spent several years doing bankruptcy turnarounds. And I asked him, what were some of the most common factors you saw with these companies that were in bankruptcy? And he said, oh, it's easy. They hadn't looked at a balance sheet in a couple of years. They hadn't balanced their checkbook, and they just had no idea about their financials. Their accounts receivable are off the charts, and they're still selling to people who are 180 days past due, and they were flying blind. So, and just sidebar.
The other thing is it prevents you from recruiting people who are really capable. If you have a lot of non-performers in the team, that kind of dead wood that you don't want to get rid of, especially when they're family, because no one's going to say anything.
Yes, that's a great point. And in fact, I left a company because of that. There was, it came down to the old saying, blood is thicker than water. And I I didn't want to be in that situation. So high performers will be repelled by that undealt with family drama. Yeah, great stuff.
Legacy. Yeah.
So we have a couple of more minutes. This has been fantastic stuff. I really appreciate everything you've shared. If people want to connect with you or find out more about your business, who might you've done a great job of explaining the type of work you do, but who might you be interested in contacting and talking with? And if somebody wants to connect with you, what's the best way for them to go about that?
The best way, and thank you for asking, is through our website, whelanadvisoryllc.com, or you can find me on LinkedIn. And companies that have around $10 million of annual EBITDA that focus in the residential industry, whether it's home builders, manufacturing companies, service company, distributors, that's really the focus that we have and the strength. If they're looking to recapitalize, crystallize some value, take some money or some risk off the table, we welcome a conversation with them.
Fantastic. Well, I'll include those links in the show notes. So, Margaret, thank you so much. This has been a fantastic conversation. I really appreciate you taking the time to share with us today. And if there's anything I can do to help you in the future, please let me know.
Thank you, and likewise.
If you're a busy construction business owner, there's a chance that you don't have good visibility into your financials. You could be getting reports too late or not getting reports at all. Or maybe you're not even keeping your books at all, and you really don't have any idea what your numbers are. Think about these questions. Are your jobs really profitable? Do you even know? What's your real overhead, and what does it mean to your earning potential? If a bank asks for a balance sheet, do you even know where to start? Look, if you want to offload your bookkeeping or payroll headaches, or you just want better financial reporting, the Apparatus Contractor Services team can help you. Visit goapparatus.com to hear from other construction business owners they work with and see how they can help you. That's goapparatus.com. There you go. Be sure to check out all the links and the notes in the show notes from this episode. To reiterate the importance of understanding your financials and having good financial information, I cannot stress this enough. I actually spoke with a gentleman who is a bankruptcy turnaround guy, and he said one of the leading indicators, one of the most common factors among the 30 plus companies that were in bankruptcy that he dealt with was the common factors were they hadn't looked at a financial statement in a couple of years. They hadn't balanced their checkbook. They were flying blind, financially speaking. So if you want to set up a precision bookkeeping system, which every business needs to have, if you want to understand how to analyze your own financial statements, if you want to make sure you're pricing your work for profit, and the big one, if you want to have tools and strategies to maximize your cash flow, then the best thing I can do for you is get you into the Construction Financial Masterclass, which is available over at buildermasterclass.com/CFO. buildermasterclass.com/CFO. If enrollment is not currently open, then put your information in, get on the wait list, and you'll be notified when it does open up. As always, I appreciate the ratings and the reviews. If you could take 30 seconds, leave a rating, leave a review for the podcast, that would mean a lot to me. And if there's anything I could do for you, you can reach me at constructionleadingedge.com. If you're a construction business owner and you want to take your business to the next level, if you want to identify some of your biggest roadblocks that you need to get past, if you want to put together a strategy for the next 6 to 12 months to get you where you want to be, I want to help you out. You can go to buildermasterclass.com/apply. That's buildermasterclass.com/apply. Fill that form out and I'll get back to you and we'll schedule a call. As always, lots of resources available over at buildermasterclass.com. One of those things that I want to make sure and point out is what's one of the biggest issues facing the residential construction industry right now? Material price increases. Lumber prices are through the roof. A couple of days ago, it said they were up 232%. So you may be wondering, how do I deal with this? How do I protect myself from material prices that could increase as soon as I sign a contract? Well, if you want to get a material escalation clause that you can just cut and paste into your contract, and better yet, if you don't have a material escalation clause in your contract right now, you're at risk, and you really want to get that solved. So if you want to learn how to do that, what that looks like, and then also learn what some other builders are doing to mitigate the risk of specifically lumber price increases, go to buildermasterclass.com/lumber. buildermasterclass.com/lumber. Fill that form out, and I'll send you a link to a webinar that I did recently with some real life builders who are talking about how they deal with lumber price increases. And you'll also get your hands on your own copy of a material escalation clause that you can put in your contract immediately, which I highly recommend. So check that out, buildermasterclass.com/lumber. All right, that's all I have for you today. Thanks so much for listening. You can reach me at constructionleadingedge.com. Go schedule a call if you're a business owner and you want to put together a strategy for the next 12 months. buildermasterclass.com/apply. And I'll see you next time. Thanks so much. More than 80% of contracting firms report they're having trouble finding skilled labor, and greatly inflated material costs are eroding the bottom line. Look, to be profitable, you need to manage your critically essential labor force with greater precision. The solution is Struxy Labor Productivity Software. Fully customizable reports allow you to establish ambitious yet realistic daily production goals, or as I like to say, what winning looks like, and estimate how many crew members and workdays are needed to complete a job on time and under budget. Struxy lives in the cloud, and by reducing time clock rounding errors, this is a big deal, it will pay for itself on your very first project. Visit Struxy.com to estimate your annual savings with their cost-saving calculator and sign up for a 30-day free trial. That's Struxy.com, Struxi.com. Software built for hard work.